All right, so not the best day for the Virgin Wick Theory traders yesterday. Personally, I went 0 and 2, so 2 trades, 2 losses, -2R. As you can see here, both were on gold around London session. So in this video, I'll break down those losses, go over what I saw. I'll also touch on how I handle losing days like this, and a few other potential setups that you may or may not want to take throughout yesterday. So some of you may have seen this before. This is my trading Bible, as I call it. Just like my rules, risk, profits, strategy, etc. But what I've also got here is just some reminders I like to look at, especially on days like yesterday where it's a red day, just 2 losses, no wins. I think it's important to have some reminders for yourself, just to ground yourself. And some things I like to remember are that you always want to focus on the process instead of profits. So even though you may have had some losses, did you follow your process? Did you follow all your rules? Did you follow your system? And a perfectly executed red day is better than a poorly executed green day. So it's always good to just focus on your rules and your system and how well you executed that. And in the long run, the money will come. Another good one is to trust your edge and understand that trading is simply a probabilities game. So you will or you may lose more than half your trades, but with a positive expectancy, you can still be profitable. And throughout all my backtesting, I know this model is profitable. So in the long run, I will be green, and I just need to understand that there will be losses. It is part of the business. No model is going to win every single day. And then I just like to be grateful that I have this opportunity to make internet monies just by clicking buttons on a screen. So even though I may have had some losses, I still have my funded accounts, I still have my eval accounts, and I still have opportunities to make money by clicking buttons. So we move forwards. All right, let's get into the trades now. First, quick reminder of the Virgin Wick theory is I just added this. So it's essentially just a break and retest and then continuation strategy, which is also known as ICC or CCT, or just different names of calling the same break and retest thing. So what we want to look for to break is virgin wicks. So these are wicks that are just untouched, that have not been, the price has not revisited that wick since that wick was created. We then look for price to close through that wick, which then creates our point of interest. Then for the next hour, we drop down to the 1 minute time frame, look for a 1 minute close below that bullish point of interest, and then we enter on confirmation of an inverse fair value gap back towards the upside. Stop just on the other side of the inverse fair value gap and targeting 1.5 to 2R, depending on the draw and liquidity. Simple. All right, let's go into the trades. All right, let's start with gold at the start of Asia. Let's go here. Boom, okay. Hold on. Oh no, let's go back here. Okay, so 6 p.m. candle closes bearishly through this virgin wick, creating your bearish point of interest here. Then from, what was it? 7 p.m, you can start to look for shorts if the POI gets engaged. So nothing yet, nothing yet. Boom. It gets wicked. Okay. yeah, so this is something else I wanted to talk about. I'm not live trading this yet, but I'm going to start backtesting if we can still take trades when the point of interest does not get closed through, but it simply gets wicked, like here, as you can see. So there's the inverse fair value gap. You would enter like there. But yeah, I wouldn't take this because there's no draw on liquidity. Like if you were to take it, you would put your TP there. So not really a valid trade in my opinion. It does end up going down to, yeah, almost 2R. But yeah, I wouldn't take that one. All right, moving onwards. Okay, so there's one at 11 p.m. Let's go there. Okay, so 10 p.m. candle closes, nice, strong chad upwards, closing through this virgin wick. And that is it, I believe. So this would be your bullish point of interest because our chad candle is bullish. And so we would look for longs from an engagement of this point of interest, starting from 11 p.m. So go to the 1 minute. And here's what it looks like. Okay, so here you can see, this is what I talked about just then. Point of interest gets wicked, but not closed through. So this is something I might look into testing further. Then we get a nice inverse fair value gap right there. You would enter there, stop just below the entry candle, targeting to bang, almost zero drawdown. Super clean trade. I didn't take this one because still need to do further testing on wicking the point of interest. But in theory, it makes sense. As long as price balances that point of interest, it should, in theory, play out. But we'll see. We'll have to test it a bit more. All right, on to the next one. All right, so midnight candle, you get this strong bearish close below this virgin wick and to this virgin wick. So these are your two bearish points of interest. And then from 1 a.m., you can start to look for shorts if they get engaged. So let's have a look. First one gets engaged, no entry model yet though. There you go. So you do get an inverse fair value. Oh wait, here's your inverse fair value gap. Entry on confirmation, stop just above the entry candle, and you can target that liquidity for 2R, and you get stopped out. Yeah, so this was one of the losses I took for the day, as you can see. It's an L there. But that's all right. It had everything I wanted in a trade. Price just didn't want to respect these bearish POIs, and that's all right. On to the next one. All right, so this is the next one. This is the 4 a.m. candle. We've got this strong bearish close, closing through this POI, this POI, this one, and this virgin wick. So those are your 4 bearish points of interest. Mark those off, and then from 5 a.m. we can look for shorts if the points of interest get engaged. So let's have a look. Boom. There's one there, actually. Whoa. Okay. Sorry. Hold Shift R. Oh no, nothing yet. Did not get closed under. Boom, there you go. There's your inverse fair value gap, and it gets closed under right there. So that would be your entry. Stop just above these highs, targeting 2R. And it gets stopped out. This was my second loss for the day. Yeah, I mean, looks like price didn't want to respect these POIs. And it ends up just chopping around for a bit. So that's all right. It had all the rules that I'm looking for in a trade. So I'm still happy with that process, and I'll take that loss any day. Let's see what else we had for the day. Oh yeah, a couple in New York. Let's have a look. So let's go to the 8 a.m. candle. Okay, so pretty strong close. Creating this point of interest. Let's see what we have on the 1 minute time frame. No close below yet. But we have wicked it. Okay, here we wick it again. We don't close below it. And then you get a confirmed inverse fair value gap. So I wasn't active during New York yesterday. But looks like this is a loss from my notes. Yeah. So you wick it, then you get an inverse fair value gap, and then you get a loss. But what's interesting is if you actually wait for a close below, so this candle here, this would be a close below. Oh, sorry, this one. And then you wait for a close above the inverse fair value gap. Maybe you could do something like that, but there's no draw on liquidity, so nah, I wouldn't take that. I think there was one more. Yeah, let's see. So that was a 10 a.m. trade, so let's go to the 9 a.m. candle. Oh, sorry. Let's go there. All right, huge 9 a.m. candle, closes through this virgin wick and this virgin wick. So these are your bullish points of interest. And you can look for longs from 10 a.m. But I wasn't active. But let's have a look anyways. Boom, POI gets engaged. Inverse fair value gap almost instantly. So that looks pretty A+ to me. But, oh, almost hits TP. Almost hits TP, but you get stopped out. That's all right. That's life. That was it for gold. I think there was a couple on NQ that I wanted to go over real quick. Yeah, so 2 trades that I wouldn't have taken, but we'll go over them anyways. All right, so 6 p.m. candle closes below these 2 version wicks, creating these points of interest, bearish points of interest. And then from 7 p.m., drop down to the 1 minute and look for an entry model. So you do get an inverse fair value gap, but it doesn't get confirmed until all the way here. You would have to put your stop all the way there. And there's no real liquidity to target, just that. So even though the model does present itself, there's no RR there for you to take. So as you can see, it kind of just chops around. And one more for the day is a 10 p.m. trade. So let's go there. Okay, so 9 p.m. candle closes here through this virgin wick and this one. So let's see if there's any longs, potential longs on NQ at 10 p.m. yesterday. So it just chops around for a very long time. You do get a wick through there. You finally get a close underneath. Finally, you get an inversion right there. So you would enter there, put your stop just below there, targeting these highs. So there's two reasons I wouldn't take this one. Firstly, it is very late in the hour, so it's 10:55. There's only 5 minutes left in the hour, as you can see from the green line about to expire. I have a rule to not take trades in the last 10 minutes of an hour, just because the POI is about to expire. And then, yeah, the second reason is there's no risk reward here. Even targeting these highs, it's only a 1.4 risk reward. I like to go for at least 1.5. But it eventually goes up anyways, so maybe you could have taken it if you have different rules, but yeah, I wouldn't have taken it. But that was me for the day. 2 losses, minus 2R. So pretty much break even after the plus 2R from the day before that. So that's all right. We keep forward testing and we keep back testing and we move forwards. See you next time.